live, and one more time. I think I said it three times. We are live. And good morning to everybody. This morning was quarter today on Behind the Markets. It is your Thursday edition, the Enterprise Thursday edition. Welcome, welcome. Today we got a lot on our plate. Today there's a lot of news that came out yesterday from IMF news. That has actually come out from the IMF into panel on African debt burdens, and some statements made by the IMF representative Abiba Selassie. We've also got news coming out in terms of the oil sector and what that means for the future outlook of Zambia. While we're going to be continuing with our end of our section, our topic of discussion today, Vernon, on which is mainly aimed at the good steward, but we're going to be looking at stewardship with entrepreneurs in mind, the importance of stewardship and entrepreneurs. But a good morning to you, Vernon, and how are you doing?
We're doing great. Never better. I don't know. Nowadays, I feel like this is a period where I'm enjoying my life every single day of it. I don't think I'm having a bad day. How's your life?
They're going to start. They'll start investigating you, Vernon. What is it you're enjoying? They'll start investigating you. Anyway, good morning to everybody who has joined us on Facebook,
Life
on
should be
social media,
enjoyed.
on YouTube, everyone, and also those who are our faithful audience joining us on the on air. Thank you very much for being with us. And if you do have any comments and views, please share them with us. You can share them in our comments section. Shout us a WhatsApp, give us a call, and we will be able to deal with what you are asking about, especially if you've got any situations that you're asking about the market specifically. Now, let's get down to today's roundup, Vernon. We start with the economic roundup on the first part of the show. Now, in terms of the market roundup, we did see that the Kwacha did gain, but on the net, but at the end of the day, it actually lost. So it was just a short-term burst of strength for the Kwacha. It dropped just below 18 and it pushed back up above 9. Sorry, just below 19, and it pushed back above 19. So you can see there's already a reverse course happening in terms of the strengthening of the Kwacha. So the dollar is getting back to exactly where it was. It was just, I think it was either some sort of a dump of dollars somewhere. It was either taxes or something, either central bank intervention, taxes. One of the two was playing out, and that's what has given the technical indicator to show that the dollar was selling. But I don't think that's going to hold for much longer. It's still in a buying pattern. Stock market went up by 0.56% yesterday, mainly due to Chilanga Cement going up by about 7% back to where it usually was in the highs of the year. 8,000 stock market sitting at 8,234. This is the all-time high again, up 12.22% year to date. With the bond index up 0.1% and in dollars down 0.69% because of the loss of the value of the kwacha at the end of the day, and interest rates just slightly coming down to 24.1052 as of yesterday. Now, we did also see against the rand, we saw a little bit of a tick up yesterday. Rand up 0.82%, up 6.7% on the month. Remember, that's a very inflationary indicator for us, especially for the cross-border trade aspect, and also that South Africa accounts for about 30 to 35% of our imports. And remember that imports are growing faster than exports, and imports are recovering. So that means, except and especially consumer goods imports, we do get a lot of consumer goods made in South Africa that come into Zambia. So therefore, there is that pressure that will actually push the exchange, the price of things up as the rand gets stronger. Simultaneously, we have seen the dollar up 2.7% on the month, mainly due to that dive down. You can see that happen mainly because of that removal of dollars that basically came into the market. So we'll see what kind of impact that'll play, and if that'll be able to continue. There are conversations still happening about whether we're going to have a debt deal by the end of this month. You know, there's the talks about a couple of weeks, and we'll talk about that from the IMF talks that came out yesterday on the Bloomberg New Economy Africa Gateway panel, which was discussed on debt burdens for Africa and how they mentioned Zambia there in the process. Now, we also do see our bond market up 0.1% from yesterday, up 12.33% year to date. Again, in dollars, it's up 0.64% year to date, but down 0.69% yesterday, mainly due to the loss of currency. And we have seen interest rates were down 0.002%. which was just a slight buying pattern. We have seen on the week interest rates are down 0.1%. So we actually have seen continuous slight buying on the secondary market, but interest rates year to date are still up 0.46%, showing that we still have relatively high interest rates for lending and for other activity. Copper was back up above 8,500 on the view of a Federal Reserve rate cut, but copper should be suffering very soon due to Chinese industrial data. That's actually unfortunately pulled things down. Oil down 73.58. It's down 1.34%, down to 73.58 in terms of Brent prices. It's probably going to suffer even worse also due to the negative sentiment that are coming from, one, the Federal Reserve, and also two, that's coming from Chinese data as well. Gold up 0.19% yesterday. So in dollars, we actually did see that our cryptocurrency Bitcoin was down 0.2%, down below the 500,000 point for one Bitcoin. Remember that you can buy a Bitcoin as low as a Satoshi, which is 100 millionth of a coin. So you can divide that price by 100 million. That's the smallest denomination of Bitcoin that is available. Ethereum down 0.1% as well. Remember that Bitcoin in the digital world, Bitcoin is meant to be gold. Ethereum is meant to be oil. So that's kind of the way you look at it, digital oil and digital gold. While you're also seeing gold itself down 0.2% yesterday, mainly due to the net loss in currency, but we will probably see that pick back up. Year to date, you are seeing that cryptocurrency, as you can see, they're in the reds on the week, on the month, and the year. But year to date, up 64.7% due to the first quarter rally that we saw in Bitcoin, and also the loss of the value of the kwacha, which pushed it up. So we are seeing that yesterday's read of the year-to-date cross-asset reads, we are seeing that bonds up 12.3%, stocks up 12.2% year-to-date, in real terms 5.6 and 5.5. Dollars are still down 1.4% year-to-date in real terms, but up 5.3%. And gold up 13.5%, showing that we're still in that defensive position. While we're seeing Bitcoin up 64.7%, 52.7. I am going to say this again, Vernon, because I am not going to take any gambles with my people. Do not go and throw all your money into dollars, gold, Bitcoin, and Ethereum, because you can lose it very quickly. Those are very volatile assets. Yes, they performed well, but they are very volatile assets. Remember what I say? Bitcoin is 500,000 kwacha, but only 1.5 years ago, a Bitcoin was 1.5 million kwacha, which means it's lost 2/3 of its value from its all-time high. Do you really want to take that risk, or be my guest? But you're going to see that this is going to be a problem. So always remember that these things have got high levels of volatility, can gain or lose money very quickly. Gold, yes, is actually the second best performing asset over the last 22 years of Zambian history, but it's also the second most volatile asset right after the stock market. So you can actually see that, unfortunately, its volatility is unparalleled as well. So you want to try and make sure that you're balancing these things according to risk and not just chasing interest and returns, because that is how, Vernon, you lose money. People who chase returns with never ever looking at the risk and never counting the cost of doing business. But year to date, these are what the assets look like across the board. Now, from our four horsemen, we did see yesterday United States PPIs did come down to 2.8%, with the main headline PPI also coming down 1.1%, showing that supply chains are becoming less inflationary. U.S. crude inventories rose 7.9 million barrels. That pushes up production, and therefore the price of oil is also feeling the pressure down from that. Indian food prices, wholesale food prices, dropped to a 6-month low, while German wholesale prices are also showing deep deflation. So supply chains and businesses are dropping in prices. That's actually a very strong indicator that the inflation spike from the Russia-Ukraine war and also the printing cycle from the pandemic is actually starting to cool down. South African business confidence, unfortunately, is down for the 5th month in a row. That means that South African goods will probably go up in price because of low production. MBA 30-year mortgages came down for the second consecutive month. Unfortunately, Namibian Central Bank enacted their 8th consecutive rate hike to 7.5% contracting capital that is sitting in Namibia. Chinese retail sales, unfortunately, came in softer than the previous month, year on year, down to 12.7% growth from last year, down 5.7% from last month's read. And we also saw that U.S. mortgage industry showing signs of recovery, especially with the lower interest rates. But unfortunately, UK construction only grew by 3.6% less, and that's down from last month. And industrial production also grew by 3.6%. Also, that's down from the last month. Chinese fixed asset investment, and this has been the biggest news, grew by 4%. That's down from the previous month, while industrial production grew by 3.5%. That's down 2.1% from the last month, showing that the industrial sector is still showing signs of weakness. Interest rates are starting to come down, except for in our fellow African countries, and Namibia is having its own case with South Africa, while inflation is cooling down. So that's what our four horsemen are telling us. Global inflation is cooling down. Interest rates are now standing still. But unfortunately, growth and industrial production are slowing down. So that's going to affect the immediate future of things such as copper. But I'm going to talk about the long-term future on the other side of things. So that's where the news sits right now. We got a kwacha that's strengthened for a few days, week, and later on. We've got commodities that are picking up in prices, except for oil. And we've got cryptocurrencies also losing a little bit of value, but mainly inflation still cooling off, interest rates now freezing, and we've got slow growth and slow industrial growth. On the other side of the break, Vernon, we're going to be going into our deep dives for the day. We've got a few stories on the other side. You want to catch us on this, and we'll be going into our charts of the day and our topic of discussion. But we'll catch you on the other side.
All right.
And thank you for having us back, Vernon. Yesterday there was a little bit of news from the. I think there was the Bloomberg was hosting its Africa Gateway New Economy Summit, where they were trying to talk about the various issues. So, various panel discussions, and it's being held in Morocco right now, where they actually are discussing some of this. I don't know if we still have Vernon here, or if we've lost you for the meantime. Okay, so there was a discussion yesterday, and one of the panels I think caught my attention.
Yeah.
Okay, so we have you there. One of the panels caught my attention, and it was
Here you know. We'll be having back shortly. Still on the very platform. I don't know, you're able to hear me.
I'm able to hear you. Unfortunately, you're just freezing at the moment.
Can
However,
you hear me?
I can hear you, Vernon, very clearly, as most of the audience can hear
Good
you.
to have you.
Uh,
So what do you think?
okay.
Awesome.
Okay,
So,
so I think getting into yesterday, I said Bloomberg, the Bloomberg Africa Forum, Bloomberg New Economy was actually having its Africa Gateway Summit that was actually being held in Morocco. It was actually officiated and opened by His Excellency the head of Morocco, the head of state of Morocco. But one of the panels that was actually quite interesting was that in debt burdens of Africa. And I want to really push on one of these issues that actually came out yesterday. And this is the talk by the IMF official, Abebe Selassie, who was actually talking about how this actually affects Africa. He's the Ethiopian. So he was actually talking about how these debt burdens are actually affecting Africa. And he talked about two main points about how we should balance taxes and paying down debts. Because he's actually trying to encourage African countries to actually pay their debts down, as opposed to trying to find a way to always just re-engineer. He said it's important, yes, to deal with debt restructuring, but underneath it all, you need to deal with the revenue side of it. Dave Ramsey says very simply, the first problem you have whenever you have a debt or you have mounting debt at a personal level is you have an income problem and an expenditure problem. These things are not in balance. You're spending more than you're making. So there's a problem here altogether. And governments seem to be okay with this idea of just spending more than they're making. But here he's actually talking about how we should be treating some tax issues. And the two main things he actually points out. So just hear him out first.
The social contract that people feel comfortable. Ultimately, how much governments are able to collect by way of taxes is about the social contract that people feel comfortable paying taxes. It's important to make sure that, of course, governments can demonstrate that the money that they're collecting is going to the right places, minimizing corruption, making sure that you're getting value for money in the investment projects that are being selected, fewer vanity projects and more projects that really appeal to our populations, investments in health, education in particular. But second also is that a little bit more bravery, I think, is needed by governments to go out and collect taxes. In many of our countries, you have a lot of tax incentives, which I'm not sure are always needed to entice investment. So broadening the tax base, minimizing those kind of incentives only to the ones that are absolutely necessary will be important. There's also quite a lot of activity that goes on in terms of companies seeking to minimize the tax burden, shifting taxes through transfer pricing. Trying to get at those will be very important to ensure that the tax to GDP ratios over time can go up in our country. But I have to say that the political side is as important, the will to go and collect these taxes. And our experience is that on average, countries are able to collect between 0.5 and 1 percentage point of GDP a year. If you can sustain that over a 3-4 year period, it really moves countries to a level where they should be able to minimize the debt servicing burden.
So I think we can pick up on two things that he pointed out there. I don't know if we've got Vernon back. It seems like he's frozen again. But we can pick up on two main things that the IMF Director of African Development, Mr. Abebe Selassie, was actually talking about. And he points out two things. The first one he talks about is the fact that for people to have confidence in paying taxes, the government must show themselves to be a good steward with that money, a good trustee of the taxes of the people, that it's not an entitlement to the government. There's still a duty of the government to show that they utilize the money correctly. So he's saying, look, you have to exhibit low levels of corruption. You have to exhibit strategic projects. You're not just throwing money into vanity projects. Like certain projects, we've had these issues here where we actually pointed out some of these projects were vanity projects. They were not exactly a strategic industrial development projects. They didn't directly go to areas where economic growth was going to occur. It was just things that looked nice, like overpass roads in some areas. They were wonderful, yes, they're nice to have, but unfortunately, those were not the priority issues that we're dealing with. Those things have not solved the unemployment problems of Zambia. Okay, because the number one issue of Zambia is unemployment and underemployment. That's where the cookie crumbles. Okay, when people have jobs and things are nice, then we can have these nice things that we put up. But can we first sort out the fact that people don't have jobs to put food in their house and they have to queue up at places to go and get food? That's a problem. That's the core issue that's actually plaguing this country. Okay, that we don't have enough business activity to hire the fast growing population of young people that need to be put into the workplaces, and especially low skilled business activity such as factory work, or let me just say low skilled, but less of the tertiary educated groups who need to use more hand based skills, because that's where the majority of the population is. Vernon, if you take a look at this, the grades even of Zambia, which subject are the students passing? Design and technology and home economics. That already tells you that the majority of people coming out of schools are able to work with their hands. Okay, their minds may not be the greatest because unfortunately their math skills and their math skills and their English skills and history skills are atrocious. The scores that they're getting in those grades are atrocious, and then you're seeing them excelling in things like home economics and design and technology. So what does it tell you? You've got a population who are very good at working with their hands, but you've got very few factories that are opening and very little industrial work that's available. So we're having a labor mismatch in this country where there's shortages of people in the tertiary skilled sectors, but there's not enough jobs in the hand skilled sectors. So as a result, that is the number one issue where we should be investing our taxes. We should be investing in trying to improve a lot happening there. So now one of the things that he is pointing out is that if governments can exhibit a much better management of taxes, people become more comfortable paying higher taxes. In fact, Dr. Fundanga, when he had left the central bank, actually did a presentation between his time as central bank and ZRA ahead. He actually did a presentation where they studied the effects of taxes and corruption and found that when there is low corruption, people feel much more confident voluntarily paying taxes because they know where the money is going. So I'm going to show you a clip. I know it's a comedy clip. This is a comedian named Ralph Barossa who actually makes a similar point in America, but he's talking about, and for everyone here, he's actually talking about cannabis here. But listen to the point he makes about taxes too.
A lot of people still don't buy from this. My buddy was telling me though, he's like, yeah, a lot of people still don't buy from dispensaries. They rather go to a dealer because dispensaries tax so much. So there's actually been an increase in drug dealers' profits, which proves like the only thing us Americans hate more than drug dealers is paying taxes. At least we know where the dollar's going, right? Mexico. Nah.
But as funny as that point is, I think you can get what he's trying to say. He's trying to say that people's issue with the tax system is they don't know where the money goes. It's not even just the tax collection. It's they don't know where the money goes. Like, we pay all this money in taxes as a nation and as people. You're paying it on VAT, you're paying it on this, you're paying it on all this stuff, but you don't know where it goes. And all you get shown are these vanity projects that never, ever go anywhere. And you see a lavish lifestyle of certain groups of people and you're getting concerned. So I think where the people are looking for is efficacy of taxes. And I think he was making the point there that, look, man, people would rather buy from a drug dealer than to go and pay taxes to go and buy cannabis, which is legal. Because you're saying, look, man, people would rather dodge taxes than do it legally. But I don't know what your thoughts are on what he's talking about. On that first part of the social contract between the people and the government, yes, we will pay taxes, but you've got to manage them properly.
Yeah, absolutely. I was reading something just this morning, and I come across a story from Drug Enforcement Commission, and I don't know if you can hear me loud and clear, though.
Loud and clear.
Awesome. So I was reading the story just this morning on just the issues of possible, process of crimes that people are living in Europe. Their properties that the Drug Enforcement Commission is actually investigating currently as we speak, and I was even sharing, still around the same where it makes more sense when people are able to pay taxes when they have money and when they know that the money is, of course, being put to good use. And unlike where you see people who, I mean, you pay taxes and you see people in these public offices get the monies and go spend and live a lavish life, and they even send you photos on Instagram. They even tag you when they are spending your monies. I think it doesn't make sense. People do not feel happy in that regard. And so whenever there is a case of public fund mismanagement and one, of course, is being dragged about, people get really interested because it's their money. So ultimately, if we can have a system which really, I think this is why I'm also in support of the integration of all of these, most of these government platforms. Whenever one is doing a transaction, even from private sector, I think Minister of Finance, Dr. Msokotwane, was even putting in a statement that now the private sector will be now transacting with the government on an e-platform and not physically, or, the usual traditional ways of transacting. That way we have less people interaction, physical interaction. That means less, corruption and whatnot. And moving forward, I'm sure people will be more than delighted to learn that, of course, their monies are being put to, to good use, and not only does someone's account have more money than a government institution. That is, someone is way richer than a ministry. That is just but concerning. So I think this tax, people, we are paying, taxpayers, we pay. We want to see money is being channeled to very good use at the end of the day. And whenever we see that, tax, I will not be compelled to pay tax if I know someone is going to misuse and pocket my money when I'm supposed to be looking at that money developing my country. Then I'm just fattening somebody's pocket. Then why should I pay taxes? I say this: pay your taxes. I'm not encouraging nobody to not pay their taxes.
Thank you.
Pay your
I was about to
taxes.
say, we need to clear the air there. We are not encouraging anyone to dodge paying taxes. I'm not, Vernon, you're on your own on that one. I am not encouraging.
It's a
But
concern.
you do see,
And also,
you do see
of course,
inflation levels rise.
they should
Yeah.
also going to look at it. And I'm always trying to be in books with the law. Trust me, I'm always paying my taxes what I'm supposed to pay and not do back some backroom. No, I do it straightforward.
Look, I think they are trying to make things a bit more easier. For example, there was a turnover tax that was introduced for gig workers and people who are freelancers, especially online freelancers. And if you do work internationally, you're paying 4% tax. The introduction of using turnover tax on landlords. People are happier now, Vernon. And I did the process with my old man recently where we just did it straight on the ZRA. We just generated the PIN from the ZRA platform, went on to mobile money, made the payment, done. The systems have become easier and the amounts have become more tolerable, and the compliance levels will probably start to increase if they can do that. I'm sure if we studied more of the landlords, you'll probably find a lot more landlords are paying their 4% tax now because they're comfortable with it, because you have to be earning over 66,000 kwacha in rental income for you to be taxed the full withholding tax. But if you're earning less than that, you're only paying 4% of turnover tax, and that will encourage a lot more people to build houses. That'll encourage a lot more of that rental income to get captured in the system. So one, if the systems are easier to pay, so using mobile and online systems, that helps. That really helps, because people don't have to leave their house. They don't have to have that fear of stepping into that ZRA office where we used to find queues coming out, especially on tax season. People just did not even want to go near those things. But what we're now seeing is that the technological platforms are actually helping the retail taxpayer actually make their payments, and especially that it's integrated with mobile money now. You can actually make it on all mobile money platforms. You're able to make tax payments, especially if you're an individual or freelancer, you're self-employed. Now, it's just about encouraging people to be a bit more compliant. That's one thing. Two, the other part also is the tax rates, but usage of taxes is the key factor. If we can see usage, and if we can see efficiency in government services. So if you see government schools are improving and getting better and better, you don't mind paying taxes. So it's not even about whether the government officials are living a lavish life. That's another conversation. Obviously, we don't want them to be corrupt and stealing. But the issue is, if they can get well paid, it doesn't matter if they're well compensated, if they can deliver good services. That's it. If they can deliver good services that are competitive with the private sector, then you will find that people do not have a problem with tax payments. And this is what they find even in the Scandinavian countries. people don't mind paying higher taxes because they know that their government delivers good services. That's the difference. So the problem here is that you cannot justify high taxes when your government delivers good service. Now, the second point he makes is actually about tax collection and tax incentives. So I think if you heard the second part, he said he'd like to see a bit more courage in African governments to actually go and collect taxes. And he did say, look, I think we're giving out too many incentives. Now, I think one of the big debates in Zambia is that we gave a restructured tax system for the mining companies, and we've seen mineral taxes are still down. Collections on mineral taxes are down very low, and collections on corporate taxes from mining companies are also low, and even corporations taxes. And we cut corporation tax all the way from 35% to 30%. To be honest, Vernon, in my books, I think it should be 21%. I think it should be 20%. The average that you're seeing in Scandinavian countries is 21%. I think Zambia should be around that place as well, because I think we're taxing too much on profits anyway. We need these profits to be reinvested for more job creation. We actually do need that. So evidently, and I'm sorry to say, evidently the government does not do a good job at creating jobs. Okay, if it's the job of the private sector to create jobs, can we bring all these taxes down to the 20s? We are just trying to start out an economy here. That's one thing. And the other thing I am thinking also, Vernon, is that I have been talking about moving the turnover tax threshold and indexing it to inflation for small businesses. That 4% threshold, one, needs to be moved to 2.6 million kwacha, because that 800,000 kwacha was created 10 years ago. In the budget 10 years ago, and the prices of things have tripled since then. So that 800,000 needs to be moved to about 2.4 to 2.6 million kwacha, and then from this point onwards, indexed to inflation every 2 to 3 years, so that part of the economy can operate with a lower and more sustainable tax rate. And also at the same time, if we can just have a standard measure that broadens across. The incentives thing, I kind of disagree, because I do realize we need to stimulate activity in this country. And I also do think that because of the tax levels being as high as they are, you're actually encouraging people to just walk away from the system. But if people are given a much lower tax threshold, this is why I say this, Vernon, the probability of facing sanctions from ZRA versus the amount of tax that you're trying to save on. If the tax rates are lower, that means you're saying, look, let's say you've got a house on rent for 5,000 kwacha, all right? And you're collecting, and then you got to pay 160 kwacha in taxes on that property, right? Now, before, let's say you were paying 500, even more. Let's say before you were paying 500, or if you could have been paying more. Let's say the withholding tax level, let's assume was 15%, and you were paying 750. Now, the cost of having to dodge taxes, the cost of a potential legal issue is high, but maybe the 750 is worth it. But now when it's down to only having to pay 160 and you're only saving 160, you're like, what's the problem? Let me just pay the tax. It's not that much anyway. That's the mentality. It's easy to do and it's not that much anyway. Let me just pay it and avoid the issue that may come with it. That is the mentality that happens when tax rate starts to come down. So he did talk about broadening the tax base to try and increase our participation in tax payments. So that's one of the things. Now, I know the conversation with mines has been a bit tough. Though, I'm not a fan of, maybe I'm just not a fan of thinking that the government is the biggest participator in the economy. I'm not really a fan of that conversation anyway. I do think that we should allow the private sector to dominate most of the economic activity, and we need to give them some leeway to do it. Government has to handle certain things. I do think that the Zambian government, for example, has taken too much of a role in society. They've taken way too much of a role in society, and as a result, they've overburdened themselves, and as a result, they're taxing the very small parts of the economy that do work. For example, Vernon, I know we're going to have a conversation about NEMA, for example. Recently, we're having parliamentary debates about NEMA, where we're talking about the fact that the NEMA should take care of those who are registered as poor and vulnerable. Vernon, that's 90% of the country. Okay, so if you want 10% of the people to pay the medical bill and 90% of the country to get it for free, that subsidization is going to cause a problem in the quality of service. And we're going to go right back to the shoddy quality of service in the healthcare system we had before. A bunch of private hospitals are going to walk away from the NEMA system, and NEMA is just going to be for the government hospitals again. Okay, so this is where we're trying to get away from it. So it'll defeat the whole purpose, because the private sector will say, no way are we going to be handling all these people here. And then NEMA is going to struggle to actually pay the bill, because they're probably not going to have enough money, because only about 10, maximum 20% of the adult population will be paying, but only about 10% for now are paying. So this is the issue I have about the government overburdening themselves, which creates a huge problem in society. Let's go into the second part of the conversation. He actually mentioned, he talked about something quite interesting. He talked later about where Zambia is and how the common framework is actually going. So here is in the second part of the
progress. So just to give a couple of examples, I mean, Chad has already gotten debt treatment. We've had initial agreement to provide financing assurances so the IMF could proceed with providing financing for Zambia, also for Ghana very recently. And we're now waiting for a final, reaching understandings on a memorandum of, an MOU, memorandum of understanding with Zambia, and very, very active discussions that are taking place. And we're very, very hopeful that something will come through in the next few weeks. So there is progress, albeit slow. So I don't think we want to throw the baby with the bathwater. And I think the common framework, just needs improving.
So, yeah, I think he is saying that, look, things are happening slow, but they are happening. So this is why I keep telling people in the bond market, pile in. So two things you can see here is they're trying to get the tax system to actually do most of the revenue collection, as opposed to countries depending more on raising capital than generating revenue. So they're trying to get the companies to say you can't run your budgets on deficits. Like, these are dangerous. Okay, at one point, Vernon, we had a budget overrun in this country of 70%, where we were spending 70% more than we were making in tax revenue. That is unsustainable, people. Vernon, if you spend 70% more than the income you make, how long before you go bankrupt? You can already see that's not going to be a pretty picture. So I think this is the biggest concern that he did point out yesterday. And so go to, I think this was the Bloomberg Africa Gateway Summit. This was actually interviews that were happening yesterday, but he did say that Zambia, they are expecting that something will come out probably in the next couple of weeks. But we've been hearing that story of the next couple of weeks for a little bit of time. I think even our finance minister just said, look, just be patient, it will come out. I think that's now the signs of frustration that are starting to show when we're not even getting dates anymore, or just being told to just wait, because this is something that's out of our hands. And the problem is, this is the first time bilateral creditors can come together. That's what the common framework did, because China was never part of the Paris Club. It has become a dominant lender. It has become a dominant economic force in just a space of 10 years. That was a shock to the system. Now, let's get into the rest of our deep dives before we get into our topic of discussion. We did see yesterday, Vernon, news that the Minister of Energy did announce that a $15 billion Zambia-Namibia oil and natural gas pipeline will be under construction, financed by the private sector. The pipeline is anticipated to supply 100,000 to 120,000 barrels of refined petroleum products per day to both Zambia and Namibia. Construction is to get started in mid-2026 and to complete in 2029. I'm going to tell you, this is actually a very important story because should this actually come out, it adds to our thesis about the growth story of Zambia 2025 to about 2035. So everybody will want to try and click up for that one. I'm going to get back to this story just now. But other news, yesterday in global news, the Federal Reserve held its interest rates after 15 months of rate hikes, signaling that it's likely to continue tightening. They're just pausing to see the effects of their rate hikes, because remember, we showed American PPI levels are coming down. Inflation levels in supply chains around the world are coming down. The decision left the benchmark Federal Reserve rate at 5% to 5.25. Forecasts imply that the officials expect two additional quarter point hikes, in other words, 0.25% hikes, or one more 0.5% hike. So the expectation is that the Federal Reserve will end at about 5.5 to 5.75% before the end of the year. And they're only expecting next year to have two more to only have rate cuts happening in the second half of the year, or at least well into the year. So most investors are only seeing this happening on the other side of it. So we actually are seeing the Federal Reserve actually did pause in rate hikes yesterday. This is a quick story about Federal Reserve confidence. You can see Jerome Powell is at the lows of where Ben Bernanke was, as one of the people who have the lowest amount of confidence in them. This was a survey of 1,000 U.S. adults yesterday done, and it did show that aside from Alan Greenspan, who basically deteriorated the confidence, Federal Reserve governors or chairs have had very poor confidence between Bernanke, Yellen, and Powell. Now, Powell did have some increasing confidence towards 2018 when he started hiking rates again, and he was actually improving situations there. But you can see since the pandemic, his popularity has declined to only about a third of Americans having confidence in him. But you also are seeing that the bond market is also starting to show this is the highest likelihood of a recession coming since 1981. So these are very strong recession indicators over the next 12 months in America. This is the NY Fed probability of recession index, which is actually showing one of the things that's leading to a low confidence in the system. Other news that came out yesterday was Caldeco CEO steps down from Chile and copper giant facing complexities with production levels at a 25-year low, and the government charging the firm with leading talks with private lithium companies to shift to a state-led public-private model. So he is finding the situation a bit more complex. Chile, the world's top copper producer and number 2 battery metal lithium producer, has seen a policy shift this year from President Gabriel Boric on hiking royalties for the private mining firms and announcing plans for more state control in lithium. Now, the problem is there's going to be that's hindering the investment that he is looking for. Now, in these months, we have faced complexities from a diverse set of areas. This is what the CEO of Caldeco, the former CEO of Caldeco, who said he's going to stick around until July. So we're already getting shifts in the biggest copper mining company around the world. And this is our final. This is one of our main stories. Just to also point this out, EV manufacturers are racing to lock down supplies of battery metals. According to an S&P Global Commodities Insight, passenger electric vehicles are expected to reach 30 million units. They're currently at 9 in 2027. That's only 4 years away. The battery itself accounts for 30 to 50% of EV production costs. So you see why there's a big issue on trying to get battery minerals. Now, there are 3 competing battery minerals here. There is lithium iron phosphate batteries and nickel manganese cobalt batteries. I think you can see we fall in the former there, nickel manganese cobalt batteries, because that's the metal mix that we have in Zambia. So you can see 30 million cars plus a year coming out, which will be producing mostly nickel manganese cobalt batteries. This is important. However, lithium iron phosphate batteries are actually gaining momentum. In 2021, there were 26% of market share. Now they're 34% of market share. And in China, they are 64% of market share. So this is actually why it's quite important, Vernon, to open up the Lobito corridor. The reason is China is opting for the lithium batteries, while America and them are opting for the manganese batteries. So the manganese, cobalt, and nickel batteries. So it actually might be of good use to us to be able to take our minerals west a little bit as well, so that we can actually now trade into those EVs, especially because they're also trying to domesticate their battery production. Remember that America is concerned that over 90% of their batteries are coming from China. Almost 87% of their batteries are coming from China. They are concerned with that. So if you open up the Lobito corridor, you can actually get Congo and Zambia channeling their minerals west and simultaneously also channeling their minerals east, getting a much better price, possibly, if we can. Now, the LFP batteries are cheaper than NMC batteries, but because they don't contain nickel and cobalt, which are very expensive minerals. So this is a big debate about what's happening. So on one hand, the batteries industry is going to help us with, remember, we've got the biggest nickel mine in Africa. We just opened that as well. And copper is also going to be needed for the wiring infrastructure of electric vehicles. But simultaneously, there's competition. Now, this is to the benefit of Zimbabwe. Zimbabwe is actually is going to be one of the biggest lithium producers as well. So Chile, Zimbabwe, they're going to benefit from the lithium phosphate batteries, while we're waiting for the nickel manganese battery. So this is a big battle that's actually occurring. Now, on the other side of the spectrum, Vernon, Wall Street oil watchers abandoned their belief in the 2023 price rally in oil. JP Morgan Chase and Co. on Wednesday became the last of the major banks to slash its forecast of oil down 11%, down to $82. Morgan Stanley led the way with the potential bull run, and they've also cut their outlook earlier in the week, we reported that JP Morgan slashed their outlook on oil, and they were the most enthusiastic oil bulls. So everyone is looking and seeing that prices are coming down, mainly because supply from Russia and Iran might come on market a lot more. But simultaneously, also yesterday, a huge news story came out from the International Energy Association agency, which did say oil demand growth is expected to slow drastically over the next couple of years. So high prices from Russia, from the Russian invasion, are expected to now stall, and we are probably going to hit a peak oil demand for combustible fuels. So in other words, in cars, of 81.6 million barrels a day in 2028, and from there, that's it. Oil has reached peak demand. So peak oil is expected in 2028, and therefore we'll start to see demand coming down, mainly due to the fact that electric vehicles are putting declines into internal combustion vehicles. I think last week we showed the chart of the fact that electric vehicles are growing in double digits while combustion vehicles are actually contracting in size. So you can see there's a big change happening. World oil markets might significantly tighten in the next 6 months or in the next couple of months due to a small Chinese recovery and also Saudi Arabia reducing its production, but over the next couple of years. And so it opens up to our chart of the day, Vernon, which shows that oil demand is near its peak. And you can see that we are probably seeing the growth of oil demand come down to the lowest it's going to be somewhere around 2028. So this is the growth projected. As you can see, we're going to be less than 1 million barrels in growth, while we're going to see millions of barrels in growth of supply, less than 1 million barrels in growth of demand, because every new electric vehicle is actually pulling down the demand for oil. So that's a big debate happening now in terms of oil. Now, what does this say, Vernon, about Zambia's economic future? I think it says something bright that we're not paying attention to. And why I'm saying this is, if you put all these stories I've just told you together, oil is expected to trend downwards over the next couple of years. So you can see the price of oil will start weakening because supply will be growing and demand will be coming down. That's one. So on the global market, the international price of oil will be coming down. Now, locally, what have we done? Locally, we have a diesel pipeline that makes it cheaper to bring diesel coming in. Now, they're just trying to fix and perfect that. On the second hand, we have a $15 billion pipeline that's expected to come in through Namibia, okay, to bring in finished petroleum from this side. So we have diesel coming in this side, and hopefully we'll get finished petrol coming in this side as well. Now, if you have pipelines coming in, bringing it in, that's cheaper production. That's expected to come online in 2029. We have $250 million being invested in the Lobito Corridor, which can also now improve transportation of oil from Lobito Oil Refinery, which is supposed to come online in 2026, coming into Zambia. And we've actually worked out some of the border posts. So that's what we've seen. So all this you are seeing, global oil prices are scheduled to come down over the next 5 years, while the structural transportation costs of oil coming into Zambia are also scheduled to come down because of cheaper sourcing from Angola, a pipeline coming in from Namibia, with a diesel pipeline bringing it in. So these things converging together should maintain inflation at a controlled rate for the next 5 years. So we should start seeing controlled inflation because the energy markets will be able to hold it while the government is no longer borrowing to the seams. On the other side of things, on the flip side of things, electric vehicles are expected to go up to 30 million in output by 2027. Okay, right now we're looking at 10. That's a tripling in electric vehicles. That means that the demand for copper starts to go up. Remember that copper is expected to go through a slump this year and a slump in 2024, and then bounce back up because of smelter capacity rising in Asia. While simultaneously, you've also got electric vehicles which are going to be demanding more copper, more nickel, and more of our manganese. So we will have a strong mineral boom while we will have an oil recession, for lack of a better word. That combination means that inflation is controlled, means our exchange rate is likely to be controlled over the next 5 to 10 years, especially from 2025 to 2030, while that means that our exchange rate can also pick up because of mineral trading. Okay, stronger mineral prices will actually pick up the economy, and therefore you probably see higher prices. Now, people are saying, but what's happening? Our mineral companies are pumping out lower levels of output because the prices are weak. They are holding back stock for the prices to get stronger. So the moment the prices get stronger, they're going to get back on the market. We've seen oil companies do this, where they can see that there's going to be a hike. They hold back stock. I've seen maize traders do this. They expect a better price in January, so they hold back stock. So the copper companies are pretty much doing the same thing. So we're likely to see somewhere around 2025 going forward. And then added to this, Vernon, in addition to all of this, one more point is that Zambia is also going to become self-sufficient for fertilizer, which is one of our biggest imports as well. Remember that the fertilizer factories that are set to be built are set to be completed by 20. We'll be importing less fertilizer, we'll be importing cheaper oil, and we'll be exporting more expensive minerals. That convergence leads to a very strong export and industrial driven economic growth cycle, similar to 2004 to 2014. Okay, that's what we're expecting to see over the next 10 years. And what happens as a result? Wages are expected to pick up during such a period, and also simultaneously, you can also see the stock market really take off in such a period. This is why I'm saying Zambia is positioned for one of the greatest economic growth cycles or creation, wealth expansion cycles in the history of the nation. Because last time, between 2004 2014, we were combating the Iraq war, where there was a huge amount the Afghanistan war and the Iraq war, where there was a huge amount of oil price inflation. This time, we're going to have oil deflation with the same booming minerals on the other side of it, and record prices on things like copper, nickel, manganese. Those things are expected to pick up, while you've got two feuding nations that are going to be actually trying to feud for our mineral resources. So really, what is this speaking about, Vernon? As a people, we must start to position ourselves. And what does it mean to position yourself? This is what it means, and I'll give it to you from a portfolio perspective. What does it mean if you're looking at your wealth portfolio? One, this is the time to buy up as much high yield before the high yields go away, and then slowly start to transition into the equities portion. Now, it doesn't mean you have to go into the stock market and start picking individual stocks. Go to a unit trust manager if you can. If you're comfortable with them, especially under the advice of a financial advisor to tell you which ones are the better ones to pick. But go to a unit trust manager and buy up units in the equities market, because at this point, some of those are expected to take off, especially the copper-related stocks, and they're captured in some of these. So start to look at capturing as much fixed income for now through your bond portfolio or your fixed income unit trust portfolio, and then slowly start making the transition, because about 2025, liftoff is happening. And Vernon, I'll ask you a very simple question before I get into our topic of discussion. Remember, Vernon, when a plane is taking off, when a plane is scheduled to take off, where do you want to be? In the plane or at your house, finally packing your bags because you've seen the plane is taking off?
Of course, you want to be on the plane.
Exactly. Sorry, I don't know if you can hear me again.
Yep, loud and clear.
Okay, sorry, I think we have I hope I'm not having an echo. I may be. Apologies if I am. No, I'm loud and clear. All right, cool. So let's get into, so for everyone right now, I'll tell you that, as I said, the nation is about to go through its greatest economic or its wealth expansion from a business and from a stock market's perspective and from a strong wealth perspective. Positioning is very important. So this is a telegraphed expansion about to take place. So finally, Vernon, let's get back into our good stewardship. And this will be a two-part thing. So remember, we talked about the good steward. And we're talking today about the good steward entrepreneur who believes in these 8 principles: that God is the creator of everything, God owns everything, I am a trustee, I'm prudent with resources, I must prove myself trustworthy, I practice planning, I pursue biblical finance, and I'm God's fiduciary. So let's look at these 5 components from an entrepreneur's perspective. So let's take a look at the diligent earning entrepreneur. Well, the diligent earning entrepreneur reflects a few key symbols. They believe that their business is a vessel for God's work. Like, they do believe that they're doing something good for society in their business and that God has sent them to do it. A lot of entrepreneurs, by the way, Baylor University did a study and said entrepreneurs actually pray more and have a stronger belief that God is actually with them and answers their prayers. And they do practice religion more. Their business is a vessel for God's work. Secondly, they're financially responsible to their suppliers and their employees, to the people that depend on them. So they exercise financial responsibility to their employees, to pay their salaries, to pay their benefits, and also to their suppliers to pay them on time. They're very grateful to be in business, Brendan. That's how they are. The diligent earning entrepreneur is very grateful to be in business, and they see God as their source. That's why I said they do pray a lot more and believe that God answers their prayers. And my brother, when you're looking at sales figures and you're looking at your bank account declining, all you can do some days is pray. They are dedicated to their work. In other words, they work more hours than the average person. While the employee will work 9 hours, 8 hours specifically, the entrepreneur in most of these developed countries will actually work 50% more hours than the fully employed person. They enjoy work and they're content in it. They actually enjoy what they're doing. It brings them joy to deliver the service that they are doing. And they push themselves to earn to their full capacity, but they are generous with their profits, generous to their shareholders. They do give bonuses where they can. They are generous with the profits and the excess of the company. So if the employees have performed very well and the company has done strongly financially, they don't mind sharing those profits with their employees, while simultaneously they do take on charitable activities. Maybe they'll support a soccer team, they'll support an orphanage, they'll do something in society. I'm going to talk about the second pillar, which is the prudent spending entrepreneur. And they don't form emotional attachments to expenditure lines. They are able to drop something that they're spending money on like this. Okay, they don't weep when they have to stop spending money on something. They avoid being greedy because, especially when you're trying to do deals, the good shepherd, the good steward entrepreneur is one that does not become greedy. If they're cutting a deal with somebody, they're not always trying to undercut everyone. They're willing to pay the fair price, but they're not trying to undercut everyone. They practice contentment. They're not always trying to compare themselves to other businesses. They're content with where they are, but not complacent. There's a difference between content and complacent. They're not wasteful with money, and they're moderate with their discretionary. Sorry, let me just put that carefully. They moderate their discretionary and luxury spending, and they strictly adhere to budgets. That is what the good steward does. And finally, I'll talk about the wise saver and the cautious creditor very quickly. The wise saver is one that makes decisions from wisdom and not fear. Okay, they track trends and they make strong wisdom-based decisions. They don't sit on piles of cash that do nothing. They're always trying to allocate cash to things. They've got reserves for rainy days, but after that, they're allocating for growth. The excess also comes from disciplined budgeting. They are risk conscious. They're not trying to get rich overnight. They seek professional advice. And the income, and they always believe that before any liability or any physical purchase, before this business buys a car, can we have the cash flow for that car? Okay. Before this business moves into an office, can we have the cash flow that supports that? That's what these good steward of an entrepreneur does. They're slow and steady in their diversification of revenue, but they do diversify. They repay their debt promptly. They see debt as bondage. They fear debt will destroy their future. They fear debt interferes with their holy walk, their walk with God. They fear debt is the creator of bad character, because now if you can borrow, you start buying city cars and things like that. And they fear debt will make them irresponsible, and they do not co-sign for debt. Tomorrow, we're going to be talking about generosity in both the individual and the entrepreneur, to talk about the good steward as well of money. But today, I just wanted to really bring this up. And in closing, Vernon, a quick script that I did pick up on yesterday. Let me just remove this. But a quick script I did pick up on yesterday, and I know the story is highly unlikely, is not confirmed, but it's highly likely, is that in Chipata, a story has broken out that 150,000 kwacha was stolen from was taken by a witch doctor from CDF money, was taken by a witch doctor, by a cooperative who decided to give it to the witch doctor to multiply. You see, Vernon, this is what I'm talking about. If you do poverty things, remember yesterday we said, if you do poor people things with money, you will be poor people. Even if I give you 150, look what you can do with 150,000. I can give it to a witch doctor to multiply. Meanwhile, the rest of the world, when other people who are wealth-minded get 150,000 kwacha, what do? They allocate it, they save it, they push it into places. That's what they do. Okay. Now you go and give it to a witch doctor to multiply. That is why no matter how much money is given to a poverty-minded person, they will have the outcome of poverty because the mind dictates the outcome. Okay. I think that's a perfect. Now, I'm not, as I said, it's unconfirmed, but let's be honest. In this country, it's highly likely. I will leave it there. Tomorrow, we'll be talking about generosity in individuals and, and generosity in entrepreneurship. I don't know if you have any last words, Vernon, before we jet off. All right. Have a wonderful day.